Have you ever watched Bitcoin move and thought, wait, is this random or is Simeon secretly controlling it? What if I told you Bitcoin follows a schedule, like an office worker on too much caffeine? Because it does, and today I'm going to show you how BTC moves every single day in a pattern that institutions already know, but most retail traders totally miss. We are talking sessions, VWAP traps, and the psychology that drives the world's most chaotic market stick around to the end. Because what I am about to show you could completely flip your understanding of how Bitcoin actually moves, and I will even tell you why Ray Dalio just said to keep 15% in Bitcoin or gold. Yay, the old billionaire just co-signed crypto insurance.
Let's destroy the first myth. Bitcoin is 24/7. It does not follow sessions. False. In reality, Bitcoin is just like any other market. It's driven by liquidity, volume, and trader behavior across 4 major sessions. Asia 0 o'clock at o'clock UTC, London 8 o'clock to 12 o'clock UTC, New York 12 o'clock to 20 o'clock UTC, NY close 20 o'clock to 0 o'clock UTC. Each of these sessions has its own vibe, its own traps, and more importantly, its own bias. And here's the kicker. 60% of the time, Bitcoin will follow the direction of the Asia session break. If Asia breaks upward, NY session usually continues it. If Asia breaks downward, prepare for it. Red day. Why? Because Asia sets the tone. Institutions front-run liquidity, and most people do not even know it's happening while they are asleep. So if you wake up and see BTC broke the Asia high, do not fight. Follow it. Here's where it gets scary. You know how people say London is the most dangerous session. They are not wrong. Only 10 to 12% of the time does London hold its highs and lows. That means most of the time, London gets reversed. So what happens? Institutions bait you in with a big move during London, then New York comes in and does the opposite. Boom. Liquidity snatched, retail destroyed. This is called a London trap, and it happens almost every day. But now, here's the tool they do not want you using. VWAP zones.
VWAP equals volume weighted average price. Smart money loves it. You will often see price bounce or reject off these zones because that's where institutions accumulated. That's where they defend their positions on TradingView. You can use session V to draw zones for Asia, London, and NY. Watch this. If BTC breaks Asia high plus, stays above Asia VWAP equals strong continuation. BIASIF, London breaks up but gets rejected at VWAP equals likely trap. If NY opens and runs London highs, then reverses to VWAP equals textbook manipulation. This is the rhythm. It's not chaos. It's a chess game. Now here's where it all ties together. Ray Dalio, the billionaire founder of Bridgewater, just said you should hold at least 15% of your wealth in gold or Bitcoin as insurance against fiat collapse. And guess what drops tomorrow? The White House Digital Assets Report. Yeah, that's the one with new regulatory language that could shift everything. Spot ETFs, CBDCs, stablecoin rules, the works. If this report turns out to be bullish, we could see the start of a major move right during the New York session. And if you do not understand how price moves across sessions, you will either miss it or worse, get trapped at the top. So what's the takeaway? Learn the sessions, track the VWAPs, know where liquidity lives, because Bitcoin is not random. It's a rhythm, and the whales, they have been dancing to it for years.
So, next time your cousin tells you Bitcoin is just digital gambling, pull up a session chart and say, "Ah, bro, this is symphony in motion." Smash that like if you have ever been trapped by London. Subscribe for more decoded strategies the whales do not want you to know. And drop a comment. Are you buying Bitcoin before or after tomorrow's White House report? Because if you wait until New York wakes up, it might already be too late. See you on the VWAP line, soldier.